Hello, folks. Aloha. Welcome to another episode of Pablo Analyzing the Markets. So today we're going to be talking about how do you profit from the markets when there are dark clouds approaching, when crypto and stocks are not in a good position. If they were to crash, should they crash or should they just go sideways? What are the options you have? Oh, what do I mean by the FANG stocks? Well, it's not quite what you're thinking. So before you tune away and think, oh no, Pablo's going to talk about, Facebook. That was the original FANG. I'm talking about the new FANG. See, is a Goldman Sachs or JP Morgan has just come up with a new list of the FANG stocks, and we're still very, very early. See, before they used to think it was FANG stood for Facebook, Apple, Amazon, Netflix, and Google. But now there's a new list of FANG stocks that, as I have been talking about in my Discord. So here's the thing. Now, many of you are probably wondering, hey, I want to be talking about crypto. You know why you want to talk about crypto? You want to talk about crypto because you think, well, crypto makes like 100x or 200x. You think stocks can't do that. Well, the reason why they're called the FANG stocks is because stocks can actually do 100, 200, 500x. Some of those FANG stocks have done exactly that. And but obviously Netflix, Google, Apple, Amazon, they're likely overvalued, except Facebook. They're probably, they've gone up 200-300x already. We're today going to be talking about stocks that hasn't moved that much yet. They're still kind of relatively near the bottom. They've just started moving, if you've been listening to Pablo. Now, why am I talking about this? See, this is what people don't understand about the market. Right now, obviously, we're not in good market conditions with Bitcoin and crypto and tech stocks. So why do you think I just moved from the beach? Because it was raining. There's a season to everything. You don't sow in winter, right? You don't plant in autumn. You harvest in autumn. There's a season, there's a cycle with all assets, with whether it's crypto or stocks. There's a cycle when it comes to when it comes to any human activity. I don't go out at night to be paddling or swimming in the ocean, right? When it's raining, I turn in. It's the same thing. Some people just don't listen. They just like to bang their heads against the wall when it's clearly, it's clearly not the right season. It's not alt season, but they keep on just buying alts. However, look, we might be starting an alt season soon. But until the signals are 100% confirmed, it's probably a good time to think about some stocks that we can get ourselves into as well and diversify our risks, especially if you're a family man. And this goes out to all the folks in my Discord, as usual, the video goes to my Discord first before it goes onto YouTube. So the new FANG stocks, without further ado, speaks for fuel. F for fuel, which is, all the oil companies. I'm sure you know how much oil has shot through the roof, and the oil companies have done really well. Even Warren Buffett has bought one and it's gone up like 40%. We're talking like $100 billion company, it's gone up 40%. Aerospace, that's the defense stocks that I've been talking about. Like Raytheon, Lockheed Martin, Northrop Grumman, General Dynamic. Agriculture can be, buying from wheat contracts or corn contract trading futures to the four, it used to be six. Now the four big seed or agricultural companies like Bayer, like Dow, like Chemical China. Then we have nuclear and renewables. So which basically just means uranium, maybe thorium in the future, and also renewables such as wind and solar, because it really comes down to Europe is really getting squeezed by Russia right now because it actually can't do anything about it because 55% of like Germany's energy imports come from energy, full stop, comes from Russia. And that's why even now Europe can't sanction Russia on energy, because if it did that, it would be sanctioning itself. So, and Germany, why do I talk about Germany? Because it's the largest economy in the EU. It's essentially the, by de facto, leader of the EU. And also last G for gold and metals and minerals. If you've been watching the Pablo channel, or if you've been in my Discord, you know that I've been talking about gold, I've been talking about uranium, I've been talking about weapons. There's a reason why we didn't get into oil, and I'll explain that in a second. So basically, the thing is, the reason why we're looking at some of these is because a number of... Now, I'm glad I got our Discord members and I got some of my followers who are just watching this on TikTok or on YouTube into uranium and into gold before this research came out. You want to get in before the big companies get in. And I think there's still a good opportunity to get in before the big companies get in. Okay, so let's have a look at where we are now in terms of why have we arrived at this point. So for example, the original, I did this mega write-up about why we have to get into commodities right now, and there's a very good reason for it. Okay, so the reason why I've been talking about commodities in my VIP is because of this. Have a look at this chart. This goes all the way back for half a century, and we can see that each time this is commodities divided by the SP 500, which is comparing how expensive commodities are to the SP 500, to the stocks. Now, for example, you're basically looking at here. See, this is the oil embargo, the spike in oil prices, which made commodities very expensive, and that made compared to stocks. Then you had, for example, in the Nifty 50 bubble of 1972, when stocks were really high, so then commodities worth very little. Then you had the tech bubble when stocks was worth a lot. So comparatively speaking, then commodities were worth very little. Again, oil crisis in the Gulf, and then 2008 you had a peak oil. And again, see how. What do you notice here? What do you notice? Each time it was a stocks bubble. See, 1972, 2000, when stocks were really expensive compared to commodities, right? Do you see that, right? And now we're here and we're even lower. Right? This was only like a month ago or 3 weeks ago when this report came out. We bounced a little. We're probably still only here. Now, but have you noticed? Do you think we're going to... Because everything goes in cycles. Obviously, there's cycles happening here. Do you think we're going to go to this point again? We're going to swing up into this point again, which means stocks go down. Usually stocks go down, crypto goes down, right? We know that. They're kind of correlated. It's not 100%, but if stocks went down that much, I wouldn't be holding out a lot of hopes for crypto. But will commodities make this massive swing up? Now, here's the thing. Look what's the commonality across the last 50 years. Oil embargo. Why? Because Israel and the 7-8 Muslim countries around it went to war. That's the first oil embargo, right? First stagflation. First Gulf War, 1991, George Bush Sr., right? Caused oil prices to spike up. 2008, peak oil caused oil prices to spike up. What is the commonality between all three of these? Whether two of them were war, but in all three of them, oil prices spiked up, right? Oil prices spiked up. What's happening now? Oil prices is spiking up because of war. So are we about to run into that situation again? Even if not, I'd be much more comfortable holding commodities as opposed to stocks. So before people panic and start asking, how do I hold commodities? How do I hold commodities? Well, the thing is, there are actually a lot of stocks you can hold, commodity stocks. I don't really quite advise commodity futures unless you know exactly what you're doing. Just wanted to introduce you guys to something. For example, this is lithium. Lithium is probably the leader. It's already up and running because, Elon Musk basically said lithium and nickel are the bottlenecks, are the essential elements to EV, electric vehicles. So basically, you can see it started running in January 2021, and it's been 14 months, and look at that major run. I just want to switch back to this for 1 second, and okay, and go over a number of reasons why we think commodities are so important right now, and it's such better risk reward to get into commodities, at least part of your portfolio, than stocks or crypto. Stocks, crypto can have a big rebound. Don't get me wrong, big rebound, but don't miss out on what's about to happen in commodities. So in the FANG stocks. So here are a number of reasons. One, as you might have noticed, right, senators urge Biden, I'll make it bigger. Senators urge Biden to invoke Defense Act for battery materials. Defense Act, that's when you go to war for battery materials. What are battery materials? Cobalt, cobalt, nickel, rare earth, lithium, those sort of things. And this was a bipartisan support. Why? Because as I've been saying, the China, Russia, and United States are playing this Cold War game again. And it's not exactly a repeat, but basically both sides are now saying we are moving away from globalization. We are decoupling from each other. Before, it's kind of like, well, we don't need rare earth because China's got all the rare earth in the world. We just rely on China to produce rare earth. And so China produces the rare earth and mines it, processes it, and it produces the chips and for cars, for laptops, and the world is happy because they're working together. It's like a marriage. Now they're separating, they're going to a Cold War situation. So basically China controls all the rare earth. America's like, we can't do that. We need to shore up our own supply line. And we saw what happened to Russia, to Germany and the European Union when you let someone else, potentially your opponent, your enemy even, potentially, to control all your supply line. So imagine if the US uses the Defense Act, which is going to war, to control these battery materials. And, basically, okay, even this was November the 6th last year, November the 6th. November the 6th was one of the few times, many times I spoke about uranium. China wants to be doing this whole, carbon neutral, carbon peak in the next 20, 30, 40 years. And basically it's spending $440 billion to do a nuclear build out, which means 150 new reactors in the next 15 years. Let's just get that into perspective. That's more than the rest of the world has built in the past 35 years, right? Think about that for a second. What's that going to do to uranium prices? Okay, I'm just trying to show you the big picture of what's happening. So this is another tweet I put out into my Discord, and it's basically Elon Musk saying, hopefully it is extremely obvious by now, Europe should start its dormant nuclear power stations, critical to national and international security. He's saying there's no radiation risk. He says he will travel to wherever you think is the worst nuclear disaster and eat locally grown food on TV. And he said he did this in Japan after Fukushima. He's willing to prove that it's safe. He's one of Boris Johnson telling his whole country, UK has got to start with the nuclear industry to get off Russian oil and Russian gas imports. Now, what I like to do is basically to buy things which are extremely cheap. There are two things you can do to make money with stocks and different assets. You can trade or you can invest. And believe me, a lot of times investing is a lot more relaxing because you make an investment and you can just sit around for like 3 or 4 years. So these are some of the stocks that has gone down, some of them up to 90%, and they're a good pickup. They're good pickup now, some of them. So TLYR is a reefer, grass, weed company, if you like, and it's gone down. It's actually gone down more than 84%. It went from $300 to $2.70 at its bottom. We were talking about it in the Discord when it was at 690. Overnight, it's popped up to 820, 850, something like that. So we're trying to look for extreme value, extremely underpriced opportunities in the FANG stocks. The FANG stocks. Now, I'm going to concentrate on talking about a couple of sectors of the FANG stocks. I'll explain why. Why don't we talk about, say, for example, fuel, oil, because oil companies are massive. If you were to buy into like an oil company, ExxonMobil, it's like the second largest, third largest company in the world. It might only go up 40% in the next year or so, right? Also, the United States can negotiate a deal, release it's with Iran, with Venezuela, can negotiate a deal with, or can open up its own strategic reserves. It can give the frackers the right, or make it easy for them, the incentives for them to start pumping oil. Oil prices can tank like this. Aerospace, weapons companies, I've been recommending those. I think they're a long-term hold. I'm not going to talk about it much in this video because the thing is, basically, again, they're super huge. They're like Lockheed Martin, Raytheon, these are $50 billion, $100 billion companies, right? You're not going to see a 100x out of them. Agriculture, unless you play whatchamacallit, the futures, which are extremely risky. You know, futures like you use 20x leverage, it goes down 5%, you're wiped out. Unless you do that, you're going to have to buy the big companies like Monsanto, China Chemical, Bayer, or Dow. I bought a couple of those, but they only go up, even in a bull run for them is like 40%. They're not going to do a 40x. So we could talk about gold, metals, and minerals, and uranium, because something like uranium has really been left for dead. Just like the weed stocks, basically people think there's no future in them. It's about a year ago, they were literally like, rock bottom. So it has a lot of upside. I mean, the entire industry is only something like $10-15 billion right now. There are companies, I'll show you, that are only $100 million or $34 million. That's like a shitcoin. That's like buying a shitcoin. Why is it possible for a shitcoin to go up 50x, 100x? Because it's so small. It goes up 100x. It's only 3 billion, right? It's only 3 billion. So for example, without further ado, let's look at this company called Core Lithium. I'm not saying we're getting to Core Lithium now because lithium has always been talked about, ever since Elon Musk started his campaign, and the Chinese companies started competing with him, the European companies, and even Ford, the Japanese companies, Ford and GM started competing with him on EV and battery making. So therefore, Ethereum took off really early. But what I want you guys to take notice is this. Check out this shape that it formed. Essentially, you have, right, something that lays dormant for years and years, like years, right? I don't know when's the last time lithium, for years ago, it's dormant at around, below 10 cents, below a nickel. And then it does a massive pump, right? Does a massive pump and then pulls back, right? And then goes sideways like this, right? And then what does it do? You can draw a line here and say, okay, there's a trend line happening here. It breaks that trend line and forms what we call a cup shape, right? A cup shape. Then the cup has a handle, cup and handle, right? Doesn't quite pull back, cup and handle, and then boom, takes off a third time. It hits the high once, twice, 3 times, then boom, it just takes off from there, right? Okay, keep that in mind because we're going to look at a couple of stocks that are basically following this pattern. So for example, let's have a look at GLD. GLD is basically the gold ETF. I just like to show you guys what it looks like on the long term. A lot of folks in my Discord has been looking at this. This is the cup and handle. So, and it's started in 2011. So it's been 11 years. It's been an 11-year cup and handle in the making. How massive would that be when it erupts? Now, as we said, first of all, it makes a massive run up, right? After years of lying flat, Okay, this because an ETF doesn't go back much, but gold has been performing flat since then. Pulls back, forms this this cup. You can probably draw a diagonal trend line here, and you say, oh, it's broke the trend line. Boom, test the all-time high, pulls back, cup and handle, and test the all-time high a third time. Remember CXO? Remember the company CXO? See, that shape is repeating itself, right? I'm not saying 100% it will, but somehow that's just how the market works. Often enough times, it does a sideways little pullback, and then boom, it takes off. So in fact, you could say, because this is a weekly, if you put it on a daily chart, you could even say gold is doing its own cup and handle within a cup and handle. See, this is cup, handle, and now if you were to draw this out, you also have a cup and handle here, and then boom. So, and you can draw this line to say, okay, gold has broken out either here or here. Depends on how you want to draw the trend line. Now, with gold, of course, we've been talking about the smaller companies, which is GDXJ and GDXJ. Now, GDX obviously is the, come on, my internet. Okay, GDXJ is the smaller ETF of the junior gold miners. So the smaller gold miners, it can just go up a lot faster. You know, in the right conditions, it can do a 10, 20x in the right conditions. And I'm not saying it will. So again, you see this pattern playing out. It has a major pump up, right? Major pump up. And then we go sort of slanting down sideways, slanting down, forming a cup shape. And then you can see this trend line here we've drawn from the top is snap that trend line. We can, if gold prices stay firm, we can expect it to go to around 60, then pull back to around 50, 48, and then perhaps take off. Perhaps, it's not for certain, but I'm just pointing out these. I can do a whole separate issue on gold by itself, but if you're on my Discord or if you look at some of my videos, I've explained plenty of times why there's a good reason for gold to take off, because we have stagflation coming up. Not just inflation, not just recession, but stagflation. So, okay. So for example, uranium. Let's have a look at lithium whilst we're at it. Lithium, for example, has taken off. This is a log chart actually. So if we don't put it on a log, it's gone from 25 to 70 to 93, like a 3.5x. So that's at least wait for it to build a base. Let's try to buy something before it takes off like that. For example, so uranium. Let's have a look at uranium. Uranium, yeah, look at this. Uranium was 134. It got down to 5, 6. It's been priced for dead, right? Then basically started waking up. I started speaking about uranium around here and, around here, July, August last year. And now we've had that pump. So, but just keep in mind, it's an ETF. ETF can go up like 5x, maybe 10x at best. If you're on the really dynamic, the really cracker place, what you would need is basically the smaller companies. So one principle that I'd like to why are we talking about like uranium gold is because of this. If we were to buy into agriculture, which I do, if we were to buy into US weapons companies, which I do, the problem is they're so big. They're $30 billion, $100 billion companies. And it's very hard for them to 3x or 5x. They'd have to go to $300 billion, $500 billion. It's much easier for a $50 million company, $100 million company to do a 20x. Then it's only $2 billion, right? So what I like to do is to get in there before Wall Street, before the institutions get in. Now, for example, if Warren Buffett can buy an oil company, like I said at the start of the video, why? Because it's it's like Warren Buffett manages like $700 billion. Ray Dalio manages over a couple of $1 trillion. And they need a company that where they can buy at least $2 to $4 billion, right? Without really moving the share price much. So they're really looking for a $50 billion company, and buy 2 to, what is it? 50, like 10% of his stock, 5% of his stock. If they bought a stock, which I'm going to show you, that only has a market cap at 100 mil or 34 mil, if they just buy a tiny little bit of it, it'll just cause the price to skyrocket. And then they've got no one to sell it to because they'd be holding like 80% of the float of the stock, right, of the available shares on their own. So basically, before Warren Buffett can get in, before Ray Dalio, before Wall Street can get in, we get in. And once that company gets to $1 billion, $2 billion valuation, then the smaller Wall Street hedge funds come in. Then Warren Buffett comes in. Then Ray Dalio comes in. I'm talking hypotheticals, of course. But that's the idea. So for example, like two uranium stocks, for example, we're going to look at is this one. I think is about 140 million, something like 120 million in market cap. So imagine like a shitcoin that's $120 million in market cap. But of course, keep in mind, the smaller they are, the bigger the risk. It's called AGE. The symbol is AGE for Alligator Energy. I think it's an Australian company. Now, once again, let's have a look at this. It's gone, oh, come on. It's basically gone flat for a long time. Look at this. It's gone flat for a long time, right? Finally, it pumped, right? Made a massive pump and pulled back, right? Pulled back, and it's falling down, falling back, doing this diagonal. You notice how it's basically doing a bowl shape, right? And we can draw a line here. Once again, we can draw this trend line here. It broke this trend line here. That was a signal to get in. These were the dips to buy. Now we can expect it to challenge this old high here and maybe pull back around, 0.088 cents. If we're lucky, 7.5 cents, and then build out and pump again to go through. That doesn't always have to happen, but it's one of the scenarios that could happen. It's already kind of left the base. See this red area, this red zone? I call that the base. So it's kind of already left the base. I'd be comfortable buying it when it pulls back. So I have my buy stops like say here and here, right? If it pulls back to this base before it takes off again. So, and it's 100 something mil. What's another stock that's also in uranium, that's also doing this shape, and its only market cap is only 34 mil? That's like the size of Santa, that's like the size of, I don't know, Wolf Girl, or it's actually about 20 times smaller than a Wolf Girl. So these are the kind of opportunities. So the one I'm looking at is called 92E. Okay, have a look at this. So for example, now of course, keep in mind, because it's 34 mil market cap, it's very risky. It's think of it as a shitcoin, right? But it's, some ways, it's slightly less risky than a shitcoin. It's better than a shitcoin. I'll explain why. So again, we notice the pattern here. It's been going flat at around 25 cents. When I started talking about it, I think I made the introduction on this coin on this day or this day, one of these days, and then boom, since then it's gone to $1 something, right? And then, think of this as a shitcoin that's basically gone from 25 cents to $1. Then it does this long sideways. You can call it a flag, you can call it a consolidation, you can call it a bull, cup and handle. It's doing that again, right? Now we draw this trend line. We say, hey, it broke the trend here, came pulled back again. More opportunity to accumulate. I've been accumulating DCA into this one. Another break here. So now we're probably on the rising part of this curve. I'm looking forward to bounce along this orange curve and then take off. It's going to test this $1 $1.05, $1.10 area again, and then maybe do it to form the cup, another handle, pull back to maybe 80 cents area, 90 cents area, and then take off. Basically, the cup and handle is playing out. I mean, I could be wrong. It can just, drop through here and go down. But think about this. The reason why we look at these stocks is because of they have what we call an asymmetrical payoff. If it goes down, right, you lose, say if it goes down from, say, 56, where it is right now, to 28, to back to base. This would be where the base is, to around 28. You've lost half of your investment in this stock. But the probability of stocks like this taking off, let's say it's 50-50. I think it's better than 50-50. But let's say if it takes off, then it can do a 10x, 20x. You lose 50%. It goes up, can go up like 20x, right? How do we know this? Because have a look at this. The last time, this is another Australian, you can buy this in America, by the way. You can buy this in America. They're listed on the NASDAQ, I think. Oh, Paladin Energy. You can, for example, if you look at, for example, why don't I just pull up a chart myself? Okay, if you look at, come on. If you look at coins like this, if you only thought that only crypto can do 100x or 1000x or something, you're about to have an eye-opener. So for example, this is a weekly chart, and this is Paladin. It's an Australian uranium company, but it's also listed in the US, so don't worry. So let's see what the price was. Let's see what's the low, 2.5 cents, 1.5 cents. See, the low here is 1.5 cents. You could have probably picked it up for 1.5 cents if you were really bullish on there you go, 1.5 cents here. If you were really bullish on uranium, 1.5 cents. Oh, 1 cent. See, 1 cent on November 11th of November, 11th of 11th, 2002. It was 1 cent. You picked that for 1 cent. It went to what? $9.48. That is a 945x. 945x. So that's 5 years later. Now, the thing is, and you say, yeah, crypto can do that. True. But why am I talking up? By the way, Paladin is down again. So after all of this time, it's raising his head again. But it's at, 90 something cents, $1 right now. So even if it goes to the old high, it's 10x. That's why I'm not talking about Paladin. I think it's quite big already. I think its market cap is around $2 to $4 billion already. So that's why I'm talking about the uranium stocks that are only 100 million or 34 million. The reason why is this, because if I asked you, what do you think is the coin to hold, other than Bitcoin? What do you think is a coin to hold through a bear market that you could guarantee will be around in 2025, in 3 years' time, and will at least 5 to 10x your money from here? Well, we don't know, because even Ethereum, he said, Vitalik Buterin said, I'm not sure if it's ready for prime time adoption yet. So the thing is, you look at Solana, you look at Luna. Is there a fundamental reason? Is there a reason why the world must use Solana or must use Luna? We don't know. I don't think so. I mean, there's every chance that AVAX, Solana, Luna, I don't know about Ethereum, but all the big coins you can think of, HBAR, may not be around anymore by the next bull market. Because if we look at the top 10 or the top 20 coins of the last bull cycle, in crypto, and the last bull cycle in crypto, they're not even around anymore. In right now, they're nowhere near in the top 10 or the top 100. So essentially, they've gone down a lot. But however, like you've got the China wanting to build nuclear power stations, 150 of them. You've got Elon Musk saying we need to build these nuclear power plants. I'll even go and eat, nuclear food growing areas that has had nuclear disasters. You have what's the name? The Prime Minister of UK, Boris Johnson, saying he's talking to the uranium bosses, trying to get nuclear power plants up and running again in the UK. We can't rely on Russian gas and Russian oil. The whole point is, can you not see there are obvious reasons why we must have gold or use uranium or use copper or have wheat, have corn. There are must reasons. If you hold on to them for a number of years, like 5 years, they might do amazingly well. They might do, 5x, 10x, no promises. So this is obviously, it's already been half an hour, and this is, it's such a wide area to cover, and I think I'd like to do more of these videos on these FANG stocks or this new commodities phenomenon in the future. Let me know in the comments if you would like to see more of them. So I'll be investing in them anyway, but this is for educational purposes only, so not financial advice. So one more commodity I'll quickly talk about is copper, and it's this pattern that we've seen so often in so many commodities. So copper, you've seen that it was up at a high of 4.5 in 2011. It's been 11 years now, and this is not regular, cup shape, but you can sort of look at it as a cup. And now we've tested this 4.5 again. As you can see, this is a weekly chart. Tested it again, third time. Fourth time, it looks like copper is now above that 4.5. Hey, little baby. And it's about to pop through. So really, what it's doing is basically, it's had the all-time high, come down, tested the all-time high, and basically formed a little rising triangle shape, which is actually really, really, really bullish. So copper is something to watch out for as well. And it's only had a 2.5x, not even 2.5x yet, from the bottom, from like a decade-long bottom. So, I wish you all more happy trading days, happy investing days. I've got to go because this little guy's trying to disturb me. Okay, so catch you guys next time.